So we do not need even up to 1 day or 1 week for us to understand what we are doing here with the simple trading methodology. Everyone who have gone through the video already understand what we are doing. So if we are having a live session, the reason for the live session is to help you build confidence in what we have. Help you build confidence in what we have. That is the main reason why we are live, to support you. Because what we have is very simple. Show this to a 15 years old, show this to a 10 years old, they will trade and make profit with it. So once again, I welcome you to the session. Now, I would like to hear from you. For those of you who were live on session when we took trade on the live call 2 days ago, let me hear from you. If you're online, let me know. Indicate.
Yes, sir, we are online.
You're online, sir.
Okay, you were online that day, right?
Yes, sir.
Yes, sir.
Did you take the trade with us? Somebody took the trade. Who was that person that took the trade as well? Or who was monitoring that same trade?
I took the trade, sir.
And you have closed on profit?
Yeah, about $80-something.
Amazing, amazing. That's great. Have anybody been looking at that trade? Because something happened yesterday on that same market, that same pair. Did it happen? How the market went down drastically?
Yes, I took the trade on sale and I made profit of $96.
Oh, you took the first day, make $80, took the second day, make $96.
Yes.
Amazing. Amazing. Now that's because you were looking at the market from either 4 hours or 1 hour time frame. What time frame were you looking at?
4 hours.
Amazing. And the trade we took that day, we took it on the daily time frame, and the daily time frame has not given us an exit.
Yeah.
That was why I hold on to the position. Even when 4 gave us a sell, that sell that yesterday was drastic. Even all the profit I earned on that account went down to 0. But I did not close the trade because I was obeying the principles of the strategy. So I could not close the trade. Let me share my screen with you.
The sales started around I think it was 2 a.m.
Okay.
So I hold the trade till 4, 5 a.m. I went off.
Okay. That's good. That's good. Screen. Okay, sorry, the network took me out. I'm back now on the session. So I was about sharing my screen with you. Let me go ahead and share the screen again. Okay, now I'm host. Share. So, I believe you can see my screen now.
Yes, we can see.
So this was the trade for that day. As you can see, the date here is 20th of March on top of my screen, 20th of March. If you see my screen coming, okay. This is 20th of March. You see it up there, 20th of March. And that was yesterday. So I took a screenshot of the account. So you see that the account went to $2 and 0.24. And this was a trade that has gone up to about, I think, $6 or so. And this one before was about 0 point something loss, but it went up to as high as even $7, as high as $7, I guess $7. What happened in the charts? Let me show you what happened. This is what happened. We work on the daily time frame. Okay, this is it. Let's check the 4 hours time frame. So the market went up. This is our entry that day. We all took this trade together and we made some profits. But all of a sudden, market just went down drastically. Now, this is why and what we are talking about, that some people will already think that the market is a set trend. Yes, if you have a very powerful strategy, a very powerful indicator, you would have entered the sell here and close on time and leave the market. But some would also be expecting that the market will still go down. That will be their expectation. But because of what we have, we were able to still hold on to this trade, even when you see that the price even went below our entry. This is our entry and our second entry. Price went below our entry, putting us on loss. But that did not force us to leave the market on loss. Why? Because of what we have, the simple trading methodology. Let me go ahead and open my charts. Let's allow it to load. Okay. So this is the charts, and this is what we have. Let's change to the daily time frame. Let's go on the daily time frame. Now on the daily time frame, this is it. Now you discover that yesterday that put us on loss was this candle. But the candle, I did not make any decision. I have to wait until the close of that candle yesterday to make a decision. Though I was seeing losses, but I have to wait and see what is going on. I would have decided to leave the market, but I said, no, let me wait. When I waited, by 10 p.m., the market closed as buy. So I did nothing. And today already, the market went back up on profits. If you check the charts, the trade, This is it. Now on profits. And this account has done about 30%, 3% profits. So this is it. So you see how the market went down. If you follow our strategy on the daily time frame, you have to stick to it. Based on how you enter the market, should be how you exit the market. If you don't behave like that, what you are going to see is that you're going to have inconsistent results. What do I mean? If I were to say, oh, I enter the market, though you can do it though, but if you want consistent results, you want to enter your trade and exit with the same time frame. Okay? Or lower. Let me explain. We enter the trade from around there. I would have naturally said, okay, let me go to 1 hour and take an exit. Exit from here, from around there, and flow with the sell. But I said no, that trade, initially on my mind, I wanted to swing that trade. I wanted to swing it. So enter the trade as a swing trade. So there is no point rushing out of the market. There is no point rushing out of the market because I wanted to swing the trade. That is why I use a reduced lot size, 0.01, because I want to swing it. And when you want to swing a trade, if suppose I enter that trade with about 0.1, when this market was going down like this, when it even went below our entry, what will happen is that fear will come inside of me and I'll be forced to close the trade somewhere around here, or at this point. And it might not even happen around this point. It will happen somewhere where I was not making any profits or I was on loss. I would have closed that trade. But because I have in mind that this is a swing trade, that is why I head into that position. So what I want you to understand here? Every trade you enter, before you enter that trade, decide whether it's going to be a scalp trade or if it's going to be a day trade or swing trade. Many of us don't know what we are or the type of trader we are. It happens most of the times. Today you find yourself swinging a trade. Tomorrow you find yourself taking a scalp trade. The following day you find yourself taking a day trade. It happens. It happens. Sometimes it is because there is no opportunity in the market. And the time you saw an opportunity, it was a swing opportunity. You have to swing it. Or the time you saw an opportunity, it was a day trade opportunity. You don't want to let it go, so you have to take it. So with that in mind, what you need to know is that every trade you are entering, you have to decide. Now, you are not deciding whether I'm a scalper or whether I'm a swing trader or whether I'm a day trader. No, you can be all of them at the same time. You can take day trading. In fact, when you have a swing position like I have now running, I can also have another trade that I know that trade I'm going to close it today on another pair. So you can take a swing trade and also take a day trade together at the same time on the same account. But before you enter each trade, decide whether that trade is a swing trade or a day trade. Now, what that will do for you, it will help you not to take wrong decisions. It will help you not to make wrong decisions. Somebody, please mute yourself. Mute your mic. Okay. It will help you not to make wrong decisions. Now, I would have exited the trade at this point, but I knew that my trade was a swing trade. I had to respect my strategy and allow my strategy give me an exit based on the swing opportunity, based on the daily time frame. Now, I would have exited here on the 1 hour or on the 4 hours when I get a sell signal. But before I would do that, I would have known from beginning when I entered that trade as buy, I would have known that I was going to look at the 4 hours or the 1 hour time frame to give me an exit. If I have that in mind, then I would have done it. Which is why you hear the statement on Forex: plan your trade and trade your plan. So because it was not part of my plan to exit the trade with the 1 hour time frame, to exit with a signal from the 4 hours time frame, I decided not to exit. I knew that I may close that trade on loss eventually. It was in the back of my mind. But I had to obey the principles of the strategy. Remember, being a profitable Forex trader is nothing about being a guru. It's just obedience to principles. So I had to wait on the market. In fact, I did not let what happened shake me. The moment I saw it, I just closed my MT4, closed my trading view, and said the next time I will check my charts is by 10 p.m. to decide. And even though the market went on sale on the 4 hours, I checked on the daily by 10 p.m., the market was still bullish. I knew that this resistance was playing, there was a resistance playing out, that's why. But I had to wait and see how the market is going to close. And then I ended up on profits. I've still not closed the trade. The trade is still running. I'm still going to hold the trade and see where this trade will lead me to, where I'm going to close this trade. Somebody already have took out profit. Now, let me tell you, the strategy remains the same. I've told you, it remains the same. Choose your time frame to trade it. The same principles work on multiple time frame. The guy that is trading the 1 hour, look at how, look at how he entered the buy trade at this point, obeyed the principles of the 8 EMA and never exited the trade because of price never closed below the 8 EMA, and exited based on this candle. So he banked this profit, was on profits. The man that took a set trade yesterday entered at this point and would have closed anywhere before this point. So even if he obeyed, even if he entered on entry and closed on exit, he would have made profit from here down to this point. From here down to this point. And if the man that took this buy trade would have still be on profit, smiling. The strategy works, the software works, you can take a loss. Now, there is something most traders, most Forex coach, most Forex content creator will always tell you. I want to know if you have heard this particular statement in Forex before, that this is a game of probability. Let me know if you have heard it before, that this is a game of probability. Tell me if you have heard it.
I've heard it.
Amazing. One person has heard it. Two persons has heard it. Who else has heard it? Who can tell me what it means and how can you apply that to Forex? Because when you see something in Forex, when I first heard about it, that particular statement, I got it from social media, Instagram. And I asked myself, how should this affect the way I trade? So who can tell me an application of that statement? You can apply it in different ways based on however, but who can give me an application of that statement? Trading is a game of probability. And how should that thing affect the way you trade? I want to hear from you. You can unmute your mic and talk.
Your emotion.
Okay.
Your emotions, sir.
Okay. So how does probability, do you understand the term probability? What does it mean when you say something is on probability?
It's either you lose or gain.
Thank you. It is not certain that you will make profits.
Yeah.
Profit is not certain. Either you lose or make profits. It's on a probability. Now, what should that help you to do? How should it affect the way you trade? How should you use that statement to affect the way you take trade?
One, control your emotion and manage your risk.
Thank you very much. Manage your risk. Now, if trading is probability, what it then means is that you are very likely to lose. Expect a loss. Expect a loss. This is the recent lesson I've learned in Forex. Always expect that the trade that you are entering is going to end as a losing trade. Does that make sense?
Yeah.
Does this make sense to you, aside from Mr. Odoshuku?
Yes.
Thank you very
Yes.
much. Thank you. Always expect, amazing. Always expect that every trade will end on loss. Now, if you expect every trade to end on loss, what would that make you to do? Answer from the.
That means we have that means our risk management needs to apply.
Thank you.
Apply this management.
Thank you. That is it. Now, do you ask yourself, on this particular trade, do I want to lose 1% or 5% of my accounts? Because you know that trade, you just accept that this trade I'm taking is a losing trade. It's going to end on loss. So you now ask yourself, if this trade is going to end on loss, do I want to lose 5% of my accounts? Do I want to lose 2% of my account? If no, adjust your lot size to the amount of loss that you are willing to accept. When you have adjusted your lot size, then that trade, remember, is the game is a probability. That thing that happened just now to you, that thing you just did by adjusting your lot size, is going to affect you in a positive way, in the sense that it's going to fix your psychology. First of all, yes, the trade may go against you and close on loss, and then you analyze again and enter the markets. If you have a working strategy, there is no way you analyze the markets for about 4 different times consecutively and take a loss all 4 times. Unless maybe you are trading on a ranging market before you can keep taking losses. If you are not on a ranging market, there is no way you can analyze based on your strategy and take for loss at a rule. So if you have adjust your lot size, that this lot size I'm using, together with where it's going to close me on loss, my stop loss or my manual exit, it's going to take out 1% of my accounts. So when that trade finally goes on loss, in fact, when it's going on loss, you are not scared. Why? Because you have accepted the loss from beginning. You were even expecting the loss from beginning. And when it finally gets to your stop loss, there is nothing like panic. There's nothing like fear coming inside of you, and greed will not come inside of you to try to revenge that trade because you were expecting it. The next thing you need to do is analyze again and ask yourself, how much loss I have taken the first loss. I want to go in again and take my second loss. How much loss am I willing to take? Okay, if it's 1%, adjust your lot size together with your stop loss to fit into 1% loss. Now, if you are not on a ranging market, that trade most likely will put you on profit. But even if it does not put you on profit, you are now on -2% and go in again with the same strategy. Do not change your strategy. See, if you must change strategy when you have left that account. What do I mean? You have $1,000 trading and you have made profit or you have made loss. Don't change strategy, continue. Only change strategy maybe after like 1 month, you have closed that month, you want to start a new month afresh. Before you say, okay, I want to try out a strategy. Or you are not trading on that particular account again. Or you have placed a withdrawal from that account, you want to start afresh before you change strategy. Now, let me tell you what I'm saying, and now it might affect you. Your first trade went on loss -1%. Your second trade went on loss -2%. And then you now say, I want to change the strategy. The third trade would have put you on profit if you did not change strategy. But because you change strategy, you might end up taking a third loss. But if you stick to that same strategy on the first trade, the second trade, there is no way the third trade will not put you on profits. Like I said, unless you are trading a ranging market. And number two, unless you are not faithful to the chart. I will explain that one later. Faithfulness to the chart. Okay, so the first one puts you on loss -1%, second one puts you on loss -2%. The third one is most likely to put you on profits, and guess what? It might put you on +5%, +3%. If you do your profits and loss, plus and minus the 2% that you lost, if you cover for it, you might be on a 3% profit. Your account has grown, and continue in that manner. You will enjoy Forex when you see Forex like probability. But when you see Forex like it must happen, I must be on profits, I must make money, then you are going to be losing and blowing accounts. Now, what do I mean by faithfulness to the charts? Let me explain faithfulness to the chart so that you understand. Faithfulness to the charts. Some people will call it showing up. Showing up. Have you heard that word? Always show up like it's a business. Always show up. Have you heard that word before, that statement? Always show up. Have you heard it on social media? Have somebody ever told you? Have you heard it somewhere? Always show up. Have you? Yes or no?
No, sir.
Okay. So now I'm telling you, always show up. Always show up. Treat it like a business. Always show up. Now, different people apply that particular statement in different ways, but let me tell you how I personally apply that statement. And I will tell you, you have to first understand yourself before you can always show up in the markets. Understand what type of a trader are you. If you are a scalper, what that means for you, if you are a scalper, it means you should always trade every day if the market is on a good condition, unless the market is not on a good condition. Always trade. That is the only way you can get to your desired results. Okay, always go on the market and check what's happening on the markets. Even if you don't even have a live account, always show up with your demo account. Even if you don't want to take a trade for that day, always show up, check the chart, check the market, look what is going to happen. Okay, always show up. Now, if you're not a scalper, the way I take that statement is you have to first tell yourself what type of trader are you before you show up. A swing trader, you need to show up at least once per day as a swing trader. You need to show up in the market at least once per day, which is always checking the markets. So as a swing trader, take out 5 minutes of your time to do your analysis of the markets per day, once per day, once per day, once per day. You are always showing up. That is what I call faithfulness to the charts. Because the day that you will not show up, let's go to the daily time frame. The day that you will not show up, that is the day you are going to have this buy signal. Imagine you took a loss from this sell trade. You were trading, you were supposed to buy. You took a buy trade and you took a loss. Now you took a loss, and this day you did not check the market. You didn't check the market, you didn't check the market. Or let's say even at this particular day, you did not check, you don't check, you don't check. The day this signal came, you were not looking at the market. What happened? You have missed this trade call already because you didn't show up. Now you might say, how come somebody will not show up for 1, 2, 3 days? Which is why I say faithfulness. What about the person showed up? The one showed up, but refused to show up on these 2 candles, on these 2 days. The person was no longer faithful to the charts. And then he missed the entry. And you know what happens when you miss a good entry? To enter the market again is difficult sometimes because of pullback. If you don't know how to enter, even if you have missed an opportunity sometimes, or most times, you might just let it go. Let me wait for a fresh opportunity. Now, what about the man trading the 4 hours time frame? The man trading the 4 hours time frame need to show up every 4 hours according to our strategy. It might not be like that for every other forex trader. Take note, this might not be like this. It might not be like that for every other forex trader. It might not be the case for them. But based on what we have, based on the simple trading strategy, you have to always show up based on the type of trader you are. If you choose to get a signal from the 4 hours, always show up in the market every 4 hours. Is what I call faithfulness to the charts. You took this buy trade, even if you did not set your stop loss, check the market every 4 hours to find out when you have gotten your exits. This is an amazing opportunity. And then you would have exited the trade at this point. You would have exited the trade at that point. So always show up in the markets. Okay? So already what we see here in this chart, aside Akinashi, look at the charts. What you want to do sometimes, please, is don't have your chart like this. Don't have your chart like this. It's too expanded. It's making you not to have an idea, an overall idea of the markets. Always from time to time, pinch your screen together. If you don't know how to do this, request for the video. I have a video. Pinch your screen together like this most times and check the markets. So generally, I see that the market currently is an uptrend. So what do? I expand it a little more. And I see we got a downtrend here, which ended at this point, and a buy trend begin from there. Let's check that buy trend. Beautiful. Now I know that we are currently on a buy trend. Now, this was what even gave me the confidence to stay on the trade yesterday. This was also what gave me confidence to stay on the trade. So when I saw that, the market, because all of a sudden, the market just dropped all of a sudden. I did not expect it even. But we all know that the market, first thing that gave me comfort in the market was the fact that the market does not go a straight line. Market never go on a straight line. Put that in your mind. put that in your head. Market never goes on a straight line, regardless of your time frame that you are trading. Market will never go on a straight line. For example, what do I mean? Buy trade, then boom, market buy up like this. No, market will always go like this, up, down, up, down, up, down. Most times respecting market structure. So what I did yesterday was to zoom like this, and I saw that, man, this is a bullish trend. And I said, what is happening was just a pullback. Market to pull back to its support and begin to go up. So I waited. I did not do anything. So by just making my chart to be small like this, the candles to be small, to see, have an overall view, understand what is going on the market. I understood what was going on in the market. So always pinch your chart like this, expand it, make it small like this. Then later you can expand it back to whatever you are doing. Okay, so what happened yesterday was that market reached a resistance, come down, and then it's pushing up. So what I'm expecting is that price will break this resistance and begin to go up. I don't know where price will go to next based on the software, but if I want to know where price will head to next, I will go on the daily time frame and check. Daily time frame, there is no resistance up here, so I can't tell. So I will go to the weekly time frame and tell from the weekly time frame. Even weekly time frame, it seems like USDJPY is on an all-time high. That is why we are not seeing a resistance. So the market is going to create a new resistance. As you can see, this is 2014. As far back 2014, the market has been below 150. As far back 2014. So there's no new resistance. There's no resistance up. So the market will now begin to create a resistance. And sometimes when market begin to create a resistance, what will happen is the market will break that level, go up, and then come down again. Then it has created a resistance. The market will go up, it can respect that resistance and come down, or go down, break that resistance. But what we are doing here is to trade based on the Akinashi. If you look at the weekly time frame as well, what do we see on the weekly time frame? Because it's good to go up. We see that on the weekly time frame, we've just gotten a fresh buy signal. And of course, we know that this buy signal that we just have, this fresh buy signal, it could be like this one, where we have 1, 2, 3, 4, 5, 6 candles. So imagine we are having 6 candles from here. 1, 2, 3, 4. It means price may just move up to this point. Imagine price moving up to this point and you are on a buy trade at this point. Imagine the profit you are going to be banking just by holding on to your trade based on how the previous day candle closed. Okay, so I've been talking. I've explained 1 or 2 things, help you to grab 1 or 2 information. Please, I would like to hear from you. If you have a question, let's answer your question. Let's answer your question. Bring your question. Let's answer your question.
Good evening. I would like to ask about the scalping strategy that you said you were going to teach us today.
Okay. Let's hope my background is not noisy, because when it's falling here, hope the background is not noisy.
It's okay, sir.
Okay. Let me teach you the scalping strategy. It's on the course already, but let me teach you. This is it. You are going to be working, let me take water. You are going to be working with 2 different time frames. We are going to be working with 2 different time frames to do this. Sorry, we can work with 2 TV different time frames. What I want to share with you, you can use it on volatility indices as well to work. It's a work. So what's the game? This is it. You do not need to have, forget about this buy and sell signal, please. Forget about those buy and sell signal. What we need is this. I'm coming. I want to off the softwares on my phone. So we have a plain chart, right? Now what you need is this. We need 4-hour time frame. Okay, let me take it back. We need let's say for example 30 minutes, 1 hour, and 4 hours. Or 1 hour, 1 hour time frame, 30 minutes, and 50 minutes. Now, you see that these are the time frame following each other. Okay. Let's ignore 45 minutes. I know there is 45 minutes time frame in TradingView. Let's ignore that one. This is to get your trend. You can write it down. This is for trend. The last one is for trend. The last time frame is for trend. Whether 4 hours is your last time frame or 1 hour is your last time frame, is for trend. Or either you call it trend or you call it bias. Okay. The 4 hours time frame or the highest time frame is for bias. Why this one is for bias? Why the second one, the second highest time frame, is for entry.
Please zoom this video. I'm not seeing anything. Oh. It's too tiny.
Cannot hear you.
I think the network is bad.
Nigeria network. Wow.
Hey God,
Network is not hearing. Network is bad. Maybe we come back.
Please, house, has anyone used this Japanese Python software to do live trading? All the trade I do today has entered into loss. All the losses.
no, I do scalping. I do scalping. I don't use that Japanese because I trade volatility.
The only loss I get for this Python software. I don't know how to use it.
I don't use it. I use that Akinashi, but I do my scalping from 4 hours, check my trend, then execute with 15 minutes.
Hey, God, It's nothing.
Even this afternoon, I was on profit.
Yeah. That Akinashi, I don't know how it works because
it's raining
I've
every
not.
year and it's affecting my network. I don't know if we should push this one till tomorrow.
Okay, sir.
Let's just push this one to tomorrow. Live tomorrow, 7 o'clock, 9 o'clock. Tomorrow, Friday.
Okay, sir.
I don't know if you can even hear me. My network is just gone.
It's not a network problem. I don't even hear anything again.
Hello.
Yes, sir. We can hear you.
Can hear you.
Yeah, please let's because my network is flat, so even I don't have any network. I don't know how I can even access you now. So let's push this. What I want to teach you, let's push it to tomorrow, 9 p.m. tomorrow. We'll be live. I'm going to teach you that. That's the first I'm going to talk about.
Okay, sir.
Okay. Let's just end the session today.
Okay.
Okay. Thank you very much. I appreciate you all.
Thank you.
Thank you, sir.
Thank you.
Yes, sir.